market is fairly priced market today. It's discounting all the uncertainties in the most optimistic manner. Fed will cut rates. Israel-Hamas war will not spill over to energy prices. Geopolitical situation will remain to the advantage of India. And corporate India will continue to grow earnings at 15% plus. I think with this kind of optimistic pricing, it will be fair to say that return in FY 2025 will be moderate compared to FY 24. Returns from large cap, small cap and mid cap all will be in a narrow band and not very wide band like last year. And most importantly, if FY 24 was the year of momentum, FY 25 will be year of quality. So undoubtedly, people are investing based on fundamentals and sentiment. Politics has ability to impact sentiment as well as fundamentals. We believe market today is discounting continuity of government and further acceleration of reforms as Prime Minister Modi was heard at RBI's 90th year celebration that इस वक्त मैं चुनाव में बिजी रहूंगा तो आप लोग सोच लीजिए और शपथ विधि के बाद दूसरे दिन से धमाधम काम चालू करना है. Undoubtedly, there is expectations in the market that big bang reforms will be unveiled in the next term and that will push India's growth orbit even further higher. So far, we have been blessed by God. All our problems, God seems to be tackling. We had a very below average monsoon last year, but in the last month, rain recovered and we closed with marginally below average. Despite geopolitical uncertainty, oil prices have remained reasonably stable, except in last few days. Vote on account, even though it was an election year, was towards fiscal prudence. And most importantly, election results are indicating continuity of government. All these things does create a very, very stable macroeconomic platform for India. There is also a bigger trend happening in India, a trend of prudent policies. During COVID, when the world threw money for consumption, we provided guarantee so that our banking system is not disrupted. But we didn't throw money at everyone to create growth. That prudent policies have helped India significantly in the days to come. We believe India today has Triveni Sangam of talent, capital, and infrastructure. Indian talent earlier used to migrate abroad for better opportunities. Now many such talent is staying back in India. Capital is being made available by private equity and venture capital funds. And infrastructure government is built at a rapid pace in last decade. With combination of talent, capital, infrastructure, continuity of government, we believe India should remain one of the fastest growing major economy in the days to come. We have seen momentum stocks doing very well, low floating stock counters doing very well. But going forward, I believe they will find it very, very difficult to meet market's expectations of profit growth from them. Some of the public sector banks are trading at double the valuation of private sector banks. If they raise to capital in the market, if they come to raise capital in the market today, they won't be able to raise at today's prices or valuation. We believe this is time to go for quality. Companies where profit growth will be higher than what is expected by the market. Companies where managements are working to convert their vision into reality. Companies where promoters will not take minority shareholders for a ride. By and large, you will find these companies in large cap companies and larger mid cap companies. This is the segment of the market which is expected to do well in the days to come. They could be found in sectors like engineering, cement, real estate, construction, and at some point of time, not necessarily today's price, but over next 6 months in IT and chemical. Our biggest risk remains complacency. Today, many investors believe equity market is like linear going up. They haven't seen a bear market. They haven't seen shares falling below its fair value. As long as investors don't remain complacent, as long as they believe there will be ups as well as downs in the market, I think we should be fine. As a country, we can't afford to score self-goal. In the past, we did reforms, but the moment we started bearing some fruits of that reform, we took our pedal, we took our foot from the pedal and let go the momentum. We must continue to push reforms through prudent policies and taking advantage of geopolitical nature. If we avoid making self-goal and if we don't become complacent, that's more than sufficient to make money in the market. Asset allocation, I will say, is a core strategy, not a tactical strategy. Yes, as of today, technically, you could be long duration as we believe interest rates will come down in the days to come. You can technically be long precious metals like silver and gold, despite their sharp run-up as we believe central bank buying of gold and lowering of interest rates by central banks around the world will result into precious metal prices getting supported. Technically, we will recommend people to be overweight large cap vis-a-vis small or mid cap. But asset allocation of keeping neutral weight to equity as an asset class in this time is a strategic call, not a tactical call. Watch a movie, watch a match, or read a book. Maybe I would have become a professor. One, I will not buy lottery, so I'm not going to win a lottery unless until someone bequeath it to me. I believe as an investor, you should not be spending your money on a hope trade like lottery. You should do SIP and build your financial security.